Hello. In the last video, we have covered the dividend discount model to find out the cost of equity, and today we are moving to another powerful tool to calculate the cost of equity, the capital asset pricing model, a CAPM. Simply links risk and return, helping us find out what return shareholders should expect. That's all with a quick example here. Let's suppose we have the risk-free rate, which is you can say 7%, and the market rate is 13%. The beta it's 1.4. Let's suppose I am just taking the values here. So this is the formula for the cost of equity. So our risk-free rate is here 7% plus our beta multiply by the market rate minus risk-free rate, close the brackets, and boom, here's our answer. So this is the cost of equity to how to find using the CEP and model. I hope you up this video and just subscribe our channel to find out more corporate finance and financial management videos. Have a good day. Bye.